Hello, I'm Doireann Mc Dermott bringing you this economic update today on Japan with Chris Scicluna, Head of Economic Research at Daiwa Capital in London. Well, after disappointing Japanese data, the new governor of Japan's central bank, Haruhiko Kuroda, said speed is important and promised to reach a 2% inflation target, despite the fact that this has been rarely witnessed since the 1990s. Now, Chris, do you think Kuroda will be able to pave the way to economic recovery? And do you think this inflation target is actually realistic?
Well, I think it's encouraging to hear Kuroda having some ambition to finally drag Japan out of that deflationary funk that it's been in for the past 20 years. But, certainly that 2% inflation target is a very ambitious one. I mean, as you suggest, Japan has only got inflation above 2% on two occasions over the past 20 years. On each of those occasions, it was really due to special factors. It wasn't down to Bank of Japan policy. First of all, at the end of the 1990s, it was due to the increase in the consumption tax. At the end of, in 2008, it was due to those sharp increases we saw in global commodity prices. It's certainly unusual territory for Japan to get into 2%, so an ambitious target. And of course, if one thinks about what happened under Shirakawa, Kuroda's predecessor, well, on average, prices fell over his entire term. Now, excluding the impact of the consumption tax hike that is currently penciled in to take place from April next year, of course, the Bank of Japan also currently expects inflation to remain well below 2% for the foreseeable future. So, on current plans, it appears that the rank and file of the Bank of Japan don't believe that the 2% inflation target is realistic. However, I think, certainly monetary theory would suggest that if a central bank is sufficiently aggressive, it can deliver higher inflation. And expectations are key in terms of driving inflation. So if Kuroda can get the Bank of Japan's communication right, can finally persuade firms, households, investors that, it finally does really mean business, then, he might just be successful in terms of driving, say, inflation expectations higher and then actually delivering higher inflation on a sustainable basis. But, certainly he does have his work cut out if he's going to do that, and it requires a significant step change in the policy behavior of the Bank of Japan.
And what are we expecting to see from the next Bank of Japan's meeting with Kuroda as the new governor? And in terms of bond buying, what do you think we will witness this year?
We certainly can't be certain about what's going to be coming out of the next policy board meetings next month, because Kuroda will still have to persuade the other members of the policy board of the merits of his argument. But I think we have seen various clues of what to expect from Kuroda's testimonies to the Diet both today and last week, as well as, we got a flavour of some of the ideas already being considered by the current policy board members in the minutes of recent meetings. And of course, no doubt Kuroda will have been eyeing what some of the other major central banks have been up to over recent quarters. So, I think there's various key elements of a policy initiative that we should expect. For a start, we would definitely expect more asset purchases from the Bank of Japan. Of course, the Bank of Japan has already committed to increase its asset purchases by 36 trillion yen this year and then move to this open-ended purchases method next year with an extra 10 trillion yen's worth of asset purchases. We would expect them to bring forward maybe 10 trillion of those next year, and actually maybe even more, 15 trillion to an extra 15 trillion yen's worth of asset purchases to this year as well. So more asset purchases, but also probably more purchases of longer-term JGBs from the Bank of Japan. The Bank of Japan has concentrated most of those recent purchases at the shorter end of the curve, so we would expect them to move further on the curve. It's questionable, however, how far along the curve they will be, although, there's certainly a body of view in the market that eventually they'll get right along the curve there. But the third element of the initiative would be essentially a follow-through from what we've heard from Kuroda over the past week or so, and this is enhanced communication, just to persuade firms, households, and investors that really the Bank of Japan does mean business. Now, that might well mean taking a leaf out of Fed policy and making a link between future interest rate changes and the economic outlook, particularly the outlook for inflation. But who knows what that will include? But that would certainly seem to me to be a wise step forward.
And Chris, do you see Shinzo Abe's influence on the Bank of Japan as something positive, or do you see it as a threat to the independence of the central bank?
I think if the Bank of Japan had any credibility to lose, then we would need to be concerned. But I think it's the Bank of Japan itself which has lost its credibility by failing to deliver inflation for so long. I mean, prices have fallen on average for the past 2 decades. So this is not a credible institution, and therefore concerns about independence, I think, are misplaced. What concerns there need to be are about policy being sufficiently aggressive to deliver the 2% inflation target that the BOJ and the government have agreed is what Japan needs, and it does need higher inflation for very good reasons. It avoids falling into scenarios like we've had whereby monetary policy is less effective, and also it takes account of natural changes in an economy such as technological change, etc., which provides a bias to measurements of inflation. So it does seem appropriate for Japan to be targeting 2% inflation rather than zero inflation, and therefore, policymakers need to be united around delivering that rather than finding reasons, such as the Bank of Japan has tended to, finding reasons why perhaps that's not desirable.
Well, viewers, I hope you enjoyed this interview with Chris, and don't forget to have a look at my colleague Monica Gibson's interview on the week ahead to gain an insight into what to expect to see from the markets this week. But for now, have a nice evening.